Taylor's going to channel his inner Bob Ross while Joel tries to draw something legible. It's time to go digging for value. I'm Allison Southwick, and I'm joined, as always, by Taylor Muckerman and Joel South, energy analysts here at the Motley Fool. Today we're going to look at some headlines, and then we're going to look at some big stories and do your artistic interpretations.
Yep.
It's going to be a lot of fun.
Absolutely.
Let's hope
Absolutely.
so.
Let's hope so. Or if
Very
not,
good car, so.
you get your money back.
That's
All right,
right.
let's head to our top story. Over at the Wall Street Journal, they're reporting that oil futures took a hit after Iran announced that it would curb its nuclear program later this month. Traders fear this means more crude will hit the market, driving costs even lower. Joel, can you talk a little bit more about what's going on here?
Yeah, definitely. I mean, Iran used to be a pretty big oil producer. Sanctions have been on it for about 2 years. They're finally getting into agreement where they'll stop using weapon-grade nuclear power for their generation. So starting January 20th, you could see them, a lot of the restrictions lessen from them. And this is important for 3 reasons. First off, if you look at OPEC production, this last month, OPEC has a cap of about 30 million barrels a day of oil production. They're at about 29.7 million right now. Iran currently produces about 2.8 million barrels, but before the sanctions, they were already up to about 4.3 million. So they're going to be pushing that cap. Will Saudi Arabia back down? Not likely, so you could see the price of Brent crude drop. The next big thing you want to look at, Iran talked about when they do open up and get more oil production, they pinpointed 7 large integrated majors, Western companies, that they wanted to come in. So who's going to get a lot of this action? It's looking like Total now. Of American companies, ExxonMobil and ConocoPhillips were both mixed or in that mix, so we'll see if they can get in and get some of that production. And then last, you want to look at what it means for refiners. You know, right now the price of Brent crude is $106. WTI is down to 92. We haven't seen that spread for, you know, what, early 2012. Yep. During those times, refiners did so well. So I would look at companies like Valero. If the Brent prices stay as high as they are now and that spread's that large, that's one of the big companies to win.
All right, let's move on to our next story here. We're going to head over to Rig Zone,
Okay.
where we've learned that upstream oil and gas deals in the Eagle Ford added up to at least $8.8 billion, making it the #1 in the U.S. for the most M&A activity. I always roll right through that, according to PLS Inc. So, Taylor, what's kind of making up that $8.8 billion?
Well, you're looking at one really big deal with Devon Energy acquiring some of GeoSouthern Energy's assets in this basin, and that was the bulk of it. That was over $6 billion, so a little bit deceiving with that $8.8 billion coming from 2/3 of it coming from one deal right there. So investors are looking at the entire upstream segment, showing a little bit signs of weakness on the M&A side of things, especially in the United States, given that $8.8 billion led all of their basins in the U.S. So you're really seeing a lack of activity, at least on the M&A side. Production's still going up, but the M&A and joint ventures really took a slide in the last half of the 2013 calendar year.
So total upstream merger activity in 2013 was down nearly 50%.
Yep.
What's going on?
I'm not too sure. I mean, when you're looking at this, you see a lot of the fields still producing, but you have to wonder if maybe the prime acreage is becoming a little bit maybe too expensive, or if some of the bigger companies that would want to purchase it already own it. You look at some really dominant players in a lot of the major basins, Continental Resources in the Bakken, by far the biggest leaseholder up there. You have Pioneer down in the Permian, blowing everyone away. And then you also have EOG in the Eagle Ford, leader in the oil basin down there. So really separating themselves out, you'd really have to see an ExxonMobil or a Chevron come in there and pick one of these companies up to make some notable M&A movements. I do like all 3 of those companies. EOG is a little bit more diversified than the other 2 because they're in all 3 basins, but they're the leaders. And I see in the next couple of years, they'll probably start pulling back on capital expenditures and just producing from the existing wells. Maybe revenue won't grow as rapidly, but earnings will once those margins widen a little bit.
Another thing that you'd look at, you're seeing not as much deals, and if you looked at 2012 and even 2011,
Yep.
a lot of those deals were coming from a lot of Asian companies,
That's right.
Sinopec in particular, that were coming over and they wanted to get our technology and get into some of these fields, and that's where a lot of the deals were done. You know, Devon, Chesapeake Energy sold a lot of assets to these companies, and they put some of the biggest deals together, and you're not really seeing a lot more of those international companies on top of the big oil companies moving in the space.
That's a great point.
All right, let's move on. And because if you want to feel 80% more manlier, you want to read Fuel Fix's article about a new life for Spindletop. It's got a lot of photos, and it was a good read.
Yeah,
Basically, they talk about renewed exploration at the Spindletop Dome. So, Joel, before we go too deep in here, can you give us a little history?
Yeah, definitely.
Because it is a big history lesson. It goes back
This is.
far.
I mean, Spindletop is the basic building blocks of what we know about oil. And this is actually an article that was tweeted out by Gregory Zuckerman, a book that I know you like, the author of The Frackers. So I read it, and it is interesting because in 1901, this was the big find. You think of that big gusher, Daniel Day-Lewis type guy standing next to him. That's basically what it was. And this is one of the biggest plays and really brought a lot of wealth into the United States. And if you looked at that 1901, around that time, there was about 100,000 barrels a day of production coming from it. This well has been tapped numerous times. A lot of production. Then 1926, they went and retapped it a little bit deeper. They got about 80 million more barrels out of it. Then in the 50s and 60s, they tapped even deeper into a new place and got about 20 more million barrels. So what you're seeing now is some private companies going in. They think that there might be some more hydrocarbons in the sand even further down. So they're trying to get down to about 15,000 feet. In a few weeks, we'll see exactly how they did.
So this is part of a growing trend, kind of going back to these older fields and using new technology, right? Like, where else are we seeing this at work?
Yeah, well, you're actually seeing a lot more companies move back into those older fields with the new technology, primarily in unconventional drilling. The Permian Basin's been being drilled since the 1920s, and you're seeing companies not only do vertical wells, they're moving and doing a lot of the horizontal wells. So ConocoPhillips has bought a lot of cheap assets in the Permian Basin, doing that unconventional drilling and really doing well. What you're also seeing is a lot of companies do tertiary recovery, like Denbury Resources. They're buying these older fields that are cheap because there's not as many oil in place, so they go and inject it with either water or CO2, push a lot of that to the well, and they're buying cheap assets and getting a lot of oil from it. So you're seeing new technology really jump into a lot of these older plays, and it's really paying off for a lot of these companies.
Yeah, great last name of that, Zuckerman. I really like that, how he spun that.
Oh, he spun
Zuckerman.
Oh.
Oh, Reimer.
That's my last
I
name.
totally didn't pick up on that.
That is.
I do know that's your last name, but I didn't realize it. Okay. All right, let's move on really quickly here. So big news coming out of the Detroit Auto Show was the release of Ford's new F-150. It's lighter and more fuel efficient due to being made of 97% aluminum. Previously, only the hood was aluminum. So we flipped this on its head here. The rest was steel. No word yet on what the miles per gallon is going to be. But Bloomberg thinks it'll be close to 30 miles per gallon. That's topping Chrysler's Ram. They were the previous leader. They had 25 miles per gallon. So do you think this F-150 is really a game changer like people are calling it?
I do believe so. I mean, they kind of tried to dispel a lot of rumors that aluminum wouldn't stand up. You think of American trucking, steel, tough, driving through the mud, carrying heavy loads, but they actually planted a few of these aluminum bodies in different industries without telling their customers that they were aluminum bodies. A little bit risky in my mind, but they all paid off. They put them in the construction, the mining, and the energy sector, and they really held up. So you're looking at these trucks rolling out in 2015. You mentioned the higher gas mileage, which will really help out with the CAFE standards, because you're looking at light-duty vehicles needing to be around 50 miles per gallon on average over the entire fleet for these companies. So trucking is a huge deal for Ford. About a third of their North American revenue comes from their F-Series truck lineup. So if they can continue to build this out, other companies are a little gun-shy right now to use aluminum, so this first mover advantage could really bode well for them.
So typically we talk about energy here, but you also cover materials. So you're looking at this more from a materials investing standpoint, right? Yeah,
aluminum producers are going to benefit very mightily if this does take off as a trend. You're looking at a lot of aluminum or steel being used in these cars now. So if they transition to aluminum, that's going to be a big growth driver and something that a lot of companies have been planning for. Alcoa in particular has already started to spend on a $600 million plan to expand their automotive capabilities in the likes of Iowa, Tennessee, and Saudi Arabia. So they're expanding their aluminum production. And then you look at Kaiser Aluminum, about 70% of their last 12 months revenue came from automotive and aerospace. And they're really moving forward ahead as well with some initiatives to build, because they expect 16 million new cars were built this year. They expect 18 million new cars to be built by 2020 per year in North America alone. So a lot of preparations going on for both of those aluminum companies.
I wonder if I have a question. I wonder if that aluminum body can still tow that airplane like you see in that Chevy commercial.
Yeah, I'll be interested to see. They might have to remake it with that space shuttle or the airplane or whatever they had in there.
Tow something, right?
Yeah, tow something.
You imagine
It's not steel.
Yeah.
You can't tow an airplane.
Right, that's
anymore.
what they got to get over, the hump of
America.
guys like you being like, America was built on steel, not tin cans.
Yes.
Right?
That's
Not
true.
Tin cans, aluminum cans,
Yeah.
but anyway. All right, that's it for the
find out.
headlines. Now it's time for you guys to get artistic.
Oh, God.
All right.
Oh, God.
No, this is good. I
God.
know you're going to do great. All right, so what we're going to do is we're going to look at a couple stories that are kind of bigger trending stories or stories that caught our eye this week, and you're going to take an artistic interpretation to your thoughts on the story.
Okay.
All right, so the first one we're going to look at is that the Washington Post actually recently ran a great primer for understanding the growing debate around lifting the ban on U.S. crude exports. U.S. oil exports have been banned for 40 years, and right now there's growing talk about, you know, are we going to lift this ban? How would we do it? What's the likelihood? Lots of lobbying going on either side. So who wants to go first?
I will. I'll hold it up, and I'm going to say it's going to require a delicate balancing act. Right now, I'm kind of hesitant about oil exports because a lot of people are saying our oil production is going to peak possibly as early as 2015. We've had some great strides. We're up to almost 8 million barrels a day. They're talking about 9.5 million barrels per day of production by 2015, but that could be the top. And if that is the ultimate production that we have, I don't see why we start exporting now with such a limited time horizon. You look at natural gas exports, we're talking about 60 to 100 years of natural gas production in the United States. The prospects for oil just aren't there on that level. So I'd be interested to see now that the Keystone XL Southern Leg is coming online this month, see how that changes the pricing versus international crude, because a lot of these big oil companies like Exxon and Chevron are complaining that they're not getting the advantageous prices that Brent is, especially with the wider spread now. So I'm hoping that this will alleviate some of the gush down in Cushing, get it to the refiners down there who are already operating at around 90% utilization in October, which was far and above the previous 4 years. So you're wondering how much more these refiners can actually benefit, which are really pushing back because they export the refined products, which I think is still a big benefit, because even if we do export oil, that refined product is going to have to come back here in a different direction.
The value add's always good. I think it's a lot better.
Yeah.
So, you know, I say the same thing. I have a stop sign. Not exactly symmetrical, but it is a stop sign.
It works for
That's
me.
not bad, though.
Not bad.
Pretty good.
What I don't like is, you know, a lot of these oil companies are looking at coal, they're looking at natural gas. They're saying, you know, we're exporting these commodities. Why can't we export crude? But you have to look at the substitutability of a lot of these. Natural gas, a lot of it will be used for the utility sector. You can also have nuclear power. You have coal power, renewable energy. There's a lot of substitutes there. Crude oil, right now, we don't have any substitutes. We don't have the infrastructure to have natural gas vehicles. So you really need crude to stay put. You're also looking at companies like you mentioned, ExxonMobil, ConocoPhillips. They're wanting to pass this because in the future they're looking at, you know, if there's too much of a glut like there is right now, they want to make sure that they can get the international price. Basically, by time that, you know, a few years from now, as production comes down, if we do hit a max production, and as we build out a lot more of the pipelines, by time that all this comes together, a lot of the prices will already be there. So we're kind of planning for the future, but I don't think it will be beneficial to everybody by the time everything comes to fruition. So, you know, I don't think it's worth it. I think we do this. It might help some of these companies in the very near term, but I don't think it's in the best interest for the rest of the country to do it over the long term.
Very cyclical business, so to make rash decisions on a whim, I mean, this has only been like a month since we've been talking about this, and it already seems like there's a lot of support for it, so you have to really question how much they can really estimate how this is going to affect us, because we are talking about possibly only a couple more years of surging production.
All right, let's move on to the next story. Natural gas futures are soaring because of speculation that U.S. government stockpiles are declining while cold weather is upon us and is going to boost demand. You got what you're going to draw?
Yeah.
Okay. All right.
Who's going first?
Going first?
Yeah, I could take it off.
All right, let her rip.
You know, what I have here is a guy with seagulls in the background that just says, this doesn't
from the
matter.
Seahawks fan.
This really does not matter. Yes,
Hawks.
yes, the range is towards the bottom over, towards the 5-year average. And if you look at this chart, you can see what's been happening here. And yes, we are to that point right now because there's been a lot of usage. The cold weather that really hit us was, a storm that hits every 17 to 20 years. So we did draw a lot of energy. But the same thing happened last year when we hit the cold streak. And yeah, natural gas prices jumped up. But for investors, does this really matter? I don't think so, because a lot of the low-cost producers hedge out their prices for a year or two. So these small bumps in natural gas prices aren't going to affect anybody. So I don't see this this shouldn't be a factor in a lot of investors' minds, because this will happen and it won't change the business over the long term.
All right, my turn. I totally agree with everything Joel said. My drawing is a little different. We are not the European Union. Storage really doesn't matter to us. I mean, our storage numbers can be replenished at a very rapid click. We're not going to run out of natural gas like the European Union has been threatened to do through over-demand based on cold weather. So I'm looking at us being able to recoup a lot of their production if we need to turn the spigots back on. The weather is just a news headline. The long-term trends are what we're talking about, slowly improving this price for natural gas companies. You look at LyondellBasell growing their methanol production on the Gulf Coast with a $150 million improvement to a plant that hasn't even been running for the last decade. So they're bringing that back online. Valero talking about $700 million methanol plant along the Gulf Coast as well. And then to move to ethylene and propylene production, Dow Chemical has about $4 billion worth of proposed projects to capitalize on natural gas. So that's where the demand is going to be. That's where the higher prices are going to come from. This weather and the storage really is a non-factor in my mind, because we do have such prolific reserves of natural gas, supposedly. But all evidence is there that we actually do. So
Absolutely.
Yeah.
All right, well, that's going to do it for today. Yeah, if you're looking for more investing analysis in the energy sector,
boom.
No, we're not doing that one today. You're going to want to check out our free report, OPEC's Worst Nightmare. You can get your copy by emailing OPEC. Anything you can do for that?
Boom, I don't know.
at fool.com. You can also follow us on Twitter at TMFEnergy. And if you have any questions for us, send an email to energy@fool.com. That's going to do it for today. For Taylor Muckerman and Joel Staub,
Jump the gun on that one.
Allison Southwick, thanks for watching.